Okay guys, we're going to go to Traders Clinic and ask Scruff. And it's another interesting question. I like these questions because there isn't a definitive answer to them. There's only an opinion. But it depends on how you're looking at that opinion. So let's get into this. So if I flick it over onto Ask Scruff, and it's a salute to Peter, so a little salute to you, kid. It's quite a paragraph, so bear with me while I read through it so we can see it. So first and foremost, thank you for your hard work and dedication. You're more than welcome. It's what I'm here for. And as much as I kick off and I like a rant every once in a while, my heart and soul is for these guys in this group. Okay, so that means a lot when I see that sort of thing. Okay, and I do try and genuinely keep you on the right track. I am brutal. I tell people to quit all the time. I tell people to stop being stupid all the time. And some don't like it and they go. Then they go to another group. Then they find out that it's all just sprinkled glitter and actually no substance, and then come back. Well, to me, I take that as a compliment because it shows I'm doing something quite right. Now, you've been in the squad for quite a bit in the background. It's one of the issues that I have. Nobody should sit in the background. Nobody should be afraid to speak out what they think in this group. You know, if you're worried about something and you think your education isn't the same as somebody else's, doesn't matter. We're all in the same boat. You know, get involved, get talking. You'll learn far quicker. If you're just sitting back all the time, you're observing, but you're not actually seeing. It's almost like hearing without listening. So come forward, talk to the guys, get involved with the Zoom calls. We're live all the time. Get involved. And you'll have found in them few months, you probably came on a bit quicker. Right. So this is your first question in Ask Scruff. For someone who may struggle with a 5-minute trigger, or who can't watch the charts all the time, would you consider a good approach omitting the 5-minute calculations in the bias tool? No, I'll get onto all this in a minute. In practice, like month, week, day, 4 hour, 30 minutes, 15, be a regional approach, or maybe stopping at the 30-minute chart as a trigger. Excuse me, as a trigger. I'm going to get onto triggers in a minute. Okay, and I've noticed you never talk about 30-minute charts. You're right, don't. I was wondering if it's because you find them useful. Would it help somebody on a 14:30 open or 2:30 if you're in the UK? When news data is released at the bottom of the hour, I'm just curious what your thoughts are and how you're getting ready for Benidorm. Well, when it comes to Benidorm, yeah, there's a few of us going. So maybe 6 to 10 of us are catching up, which will be good. And yes, I am ready for Benidorm. Got all the guys' t-shirts and everything. Had a good chat with Kevin as well yesterday. Great to catch up with you, kid. And we're going to have a good time. But let's sort of pick down through this. Now, first of all, you kept mentioning triggers. And I think this is an interesting debate because you say, should I omit the 5-minute calculation? Well, the answer is no. You can look at a 4-hour chart as your entry chart, but you still want to see the big picture of the market. And the big picture of the market, as you know, I look at 3 trends. You've got the deep, the double D, and the now. But I want to see what they are in relation to each other. If I miss out charts, I'm kind of missing out parts of the puzzle. Now, the trigger, where people say, oh, I'm looking at 5-minute triggers and I have to be in front of the screen all the time. No, you don't. And again, that's where somebody misses out. Now, I use 15-minute charts mainly just to monitor, but my main triggers, and I think triggers might be the wrong word. Let's put it this way. I use high time frame trading on low time frame entry. And what that means is I look at the higher time frames all the time to get an idea of direction, get an idea of what the chart's trying to achieve, and then pull it down into an hourly for an hourly bias. So whatever it's going to do in that hourly period, and then I'll just look for a reasonable criteria to get in. Now, anybody who knows me for a long time knows I use levels. But I do use confluence in this form of certain indicators just to see if the general market is in my favor. If that is the case, I then enter the market, because the entry point, because everybody is the same. And in fact, I might do coffee on Scruff with this. Show me how to get in. Show me how to get in. Oh, this is the magic system. This is how you get in. Oh, look at this. And I had one today. You need to look on a tick chart. Get a look at a tick chart. Fucking idiot. Right? The lower you go into the chart, the narrower the field of vision becomes. You can't actually see what the chart is trying to achieve. And you can scrunch it up and do what you like. You can't see it. None of it. But if you scroll out of the chart into the higher time frames, your hourlies for a day trade, your 4 hours and your dailies for a swing, and your weeklies and monthlies for an investment. Now that's showing you where the money's going. That's showing you where the big boys play. And let's be honest, that's who moves the markets. Not us down on a 5-minute chart. That is just dumb. All the 5-minute chart is, it just shows you what the price is doing at that moment in time in and around a given point of attraction. Now, if that point of attraction happens to line up with roughly where you want to get in, because your price is what's called a constant. So if you can't be at the charts for all day, and you shouldn't be at the chart at all. You should be able to just look at the chart on a 4 hour, let the candle close. That price on that 4 hour close is in exactly the same place as on a 5-minute chart or even a tick chart. The price is constant. It's in the same place on all time frames. So when you're missing charts out in one thing and another, it doesn't change the trigger. But what it does change is the dynamic. And it's the dynamic that the sheet is trying to pull out. What it's doing is it's looking at a basket at the top, basket in the middle, and a basket at the bottom to give an overall picture of what the market is trying to achieve in the next time frame. Now, the time frame that you choose to trade in is up to you. If you're a 4 hour trader, that price is in the same place. The big picture at that moment in time when you've done your analysis might say it's going up or it's going down, and then you choose to get in or get out. It's that simple. It's not difficult. So putting a big emphasis on 5-minute triggers, as people call it, is actually the first step to failure. Because what you really need to be doing is looking at the big picture, what the market's trying to achieve, and then what it's trying to achieve in the next candle that you're going to trade. So it doesn't matter if it's a 30-minute, 5 hour, whatever. But the lower you go into the chart, the less chance you have of hitting a decent run. So I like an hourly chart because I want around 10 pips minimum for a trade. And I know in the course of an hour, before the dynamic changes at the close of that hour, I might get my 10 pips. And if I've done my analysis correct, which, as you see, day in, day out, I spend a lot of time on my homework before I even press the button. That's why my hit rate is high. I could just come straight off an hourly chart. I don't even have to go into a 15-minute chart. Just a 15-minute chart shows that hourly a little bit clearer so you can kind of see it. And you can maybe place your order above or below a given candle. And that's all the low time frames for. It's got nothing to do. So if I was a 4 hour trader, I would still look at the 4 hourly close and then drop it on a 15-minute candle to see how that 4 hours was made up, and then just pick a point out what I think is decent for my pending order and then let it get on with it. Once it's been triggered, I then move over into where the money is really made, and that's into the management of the trade. Getting into the charts is not what makes you money. It's how you get out of them what makes you money. It'll stop you losing a fortune, or it'll help you fill up the bank account. The entry doesn't do that. But everybody else out there, show me how to get in. I'll show you the perfect system. This is where you sell.
This is where you buy, because this is a super system. Oh look, it's a liquidity sweep. Oh look, it's an FVD. Oh my god, this is amazing.
Is it? Then why is the failure rate 80%? Think about it. If we all did what these people say, every one of us would be mega rich. I'm not mega rich, but I do okay, because it takes money to make money. And I treat it as a job, and I get paid as a job, and I'm happy. And I look to do 1-2 trades a day, so I only need to look at hourly charts, not 5-minute charts. Hope that makes sense. Anyway, keep them coming. We'll keep having the ramblings of a madman, and next week might be the ramblings of a drunk man, but either way, it'll still be me. As always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.